daily market analysis. This is for tomorrow, October 31st, Thursday, monthly expiry, 12:34, and let's get the charts. Today the investing.com charts are not widely giving the figures for the Nifty, especially. It's 100 point less. Nifty closed at 24,350, somewhere near to that actually. 350, so it's 100 point additional that is showing here. So we'll refer to the candlesticks for this on trading view instead. So Nifty, if you look at Bollinger Bands first, that's what we normally start with, right, to get the direction. So it's sideways. There's no expansion on the downside, but the sideways is bearish bias. Banknifty, it's absolutely sideways, consolidation, contraction, and no expansion in the upside and downside. Sideways market is what it is indicating on both. Candlestick, if you see, it's almost like an inside bar if you ignore the wick size. Inside bar, and it's an inverted hammer. Right. So basically, inverted hammer could indicate a reversal if it moves above or below the high. It's not very relevant because it's not in the top of a trend or the very bottom of a trend. So otherwise, the candle is small, that indicates it's indecisive. The wick size is more, which indicates there is selling pressure, there is resistance, and the inside bar inside the body of the previous candle indicate it is consolidating inside this. Overall, it is just indecisively consolidating, very volatile, because the wick size indicates volatility. Bank Nifty is pure inside bar, inside the big green candle that formed last trading day. That was yesterday, right? So that indicates pure consolidation. It's also almost like an inverted hammer, although there is some wick on the bottom. So that also is clearly saying body is small if you compare the wick size. So indecisive consolidation here in the Bank Nifty also. That's what this is indicating. Candlestick is indicating. But otherwise, if you want to study the resistances and supports, 25,000 is going to be the key because that is where the resistance is there of the 20 and 50 and expansion moving averages. So Bank Nifty. After that, the resistance will be 25,434. That's what the previous resistance zone is there from the record happened earlier. And then you have the gap 25,740, which is a window gap resistance. Downside, the first major support will be the 24,000 nearby zones. 2590 to be precise, where the previous swing low is there. 24,000 is the rounding number, and then you have another previous swing lows that would come in at 23,900. So 23,900, and then Fibonacci retracement is coming at 23,900, very close by, right? 23,800. 23,800 to 24,000 is a very good support zone, right? 23,800, 23,900, 24,000 and 24,066, 67. These are all previous swing lows in Fibonacci retracement 50 level. So very good supports can come in all this. If that is breached, it goes to the 200 expansion moving average at 23,387. Right? There is no supports after that. Right? It also is a Fibonacci 61 retracement 100 points below. So that's the supports in Nifty. Bank Nifty, if you see, while it is consolidating, the immediate resistance would be to take out that high of this yesterday's big candle, that is at 52,360 zone levels. So if that is taken out, then you have a major resistance that is coming at 52,820. That's a gap resistance, and after that there is a neckline resistance at 53,000 and 53,360. Then you have a resistance at 53,763. That's the resistances on the Bank Nifty. Downside, Bank Nifty could find very good support at 50,193 zone. So it is a previous swing low, and also a Fibonacci 50 retracement levels from the top. If that is also breached, then 50,000 comes in very close by. 50,000 also breached, then you have 49,522. Well, the 200 expansion moving average is there. Close by below at 49,300 is the Fibonacci 60 retracement levels as well. That's for the Banknifty supports that we're talking about. Now, what exactly happened in the market is basically some movement in like kind of flattish. One of the big performers, Nifty contributors has come in. Southern Enterprise and Maruti. It showed some green. Right? Among the advanced decline also, it's only the smaller banks, smaller contributors that showed some green. So if you look at major indices, the major stocks that contribute to the index, you can see that ICICI Bank got hit and Infi also got hit and Kotak Bank also. Those were more than 1%. In fact, Nifty lost 2%. HDFC 1%. HDFC also didn't. So HDFC, ICICI Bank, Infi and Kotak Bank, they all lost more than 1%, with maximum hit taken by the Infi. So what is good? Others are all flattish. So heavyweights continue to be in trouble with the Reliance and the IT stocks Infi and TCS in the bear zones actually, along with Kotak Bank. So what is holding the market is ITC, HDFC Bank and ICICI Bank. That's about heavyweight stocks. Now if you look at the sectoral indices, the broader market index is showing some green since last 2-3 days after taking a correction of around 10%. It is showing third day of green close and it's trying to move upwards. So that is a good sign. But broader indices, if you look, IT got hit back once again, but it's not very far away from the all-time high levels, and not all-time, the previous, actually all-time high levels. So IT got hit today, so today Pharma also got hit. So both are defensive stocks that got hit. What performed was FMCG. Performance is recovered. But we have trouble with respect to the momentum in the short term. We have auto, pharma, FMCG all having bearish momentum. That is below RSI 40. But the IT, metal and realty is holding up above and sideways. So defensive stocks are having trouble. Defense in the sense the pharma also has fallen to the sideways. So in the bear zones today. So sectorally, it is sectoral index wise. If you see major sectoral indices are all having trouble in the short term. Full recovery is not seen there. Actually, no recovery is seen there. Only the and so that's about it, right? But recovery is in the broad market indices of small cap and mid cap. Now support resistances we have seen, but volatility index is showing spike. That is something that we have to be cautious about. India VIX is spiking up today, right? So it has in fact spiked up 30% in the last 1 month alone, and it's in the bull. It's spiking up. Like 50.5 is medium volatility, no longer low volatility. So there is a fear of the US elections and then interest Fed rate cuts that's coming next week, and ongoing Middle East tensions and all that. That's what the reasons. And primarily the US elections is probably the spike. So we have to be cautious. There is fear in the market. Even when the market is not falling down, there is fear in the market is what is indicated. Now momentum in the trend, if you see, they are the bear zones, and this is very bearish actually. Just hit RSI 40 nearby and then taken a bend. This is clearly bearish. So Nifty has turned more bearish. Banknifty also has lost some of the momentum it gained yesterday. Trend wise, both are bearish trends, and it was not crossed over. And bearishness is increasing in the trend as with respect to the ADX. There is increasing the strength of the bearishness in the Nifty. While Banknifty also strength remains negative, DMI negative. So that's something you have to keep in mind, right? So price patterns are not great. It's at persistence. Candlestick show consolidation. Momentum is in bear zones in the case of Nifty. Main market trend is also negative. Volatility is spiking up, which is negative. Heavyweights are in trouble with just majority of them in the mid short term trouble in bear zones. Sectors also trouble. Broader market is showing some green. Support resistance we have seen, and tomorrow is a monthly expiry. So monthly expiry are usually very volatile. So let's look at the levels. So PCR is showing 0.8, which is bearish nature. Levels are showing highest resistance at 25,000. That's key. Call writing maximum is seen at 25,000 and 24,400. Support is seen at 24,000 highest. We have some support at 24,300 as well, close by where it is right now. So the play may be at between the 24 and 24,500. Whether it is trying to hold the 24,000 or trying to hit the 24,500, we never know. We'll know tomorrow. You can see a lot of resistance being built up, correlating and unwinding of the put. That also is bearish in nature, indicates that there could be a fight for the 24k tomorrow. It's possible. So correlate that levels that we see in the charts with that of the open interest options. Right. FS has been smelling 1 lakh crores, the biggest sell-off that has happened, even worse than the COVID March 2020. So that is a concern, but domestic institutional money is what is holding the market, and the market keeps moving just because of mutual funds money, DI money. US markets are showing some resistance, but it's not very far from the all-time highs despite all the four global cues and uncertainties of elections. Gold is all-time high, spiking up and up, which is also a concern because probably equity market could get into trouble if the people shift the money to the gold. Oil is fallen down after Middle East crisis, cooled up a little bit below the 70 right now. So to sum it up, market is was very volatile today. If you see the 50 minutes charts, although the close is kind of just 0.5% gone. It was weak from the beginning, it came down and then it was a range bound, going down, up, so it was very volatile intraday. Nifty also down, up, so that's very volatile. Obviously when it's above 15 it will be volatile, but yeah, market is range bound and decisive, consolidating, all those things are there, so keep that in mind. We have major events that's coming in November first week, so you have to be cautious. You don't know the directions. Nothing has turned bullish as of now except the big move that happened in Banknifty yesterday. So be cautious, but yeah, market shows indication to move in sideways, but it is facing severe resistances. With Banknifty showing better strength, but Nifty is on the contrary weaker. So that's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.